Hello, fellow real estate investors. This is the February 2024 DSCR loan update, and today's indicated DSCR loan interest rate is 7.7%. You take the 5-year US Treasury, which is 4.2%, and you add a 3.5% credit spread, otherwise known as a risk premium, and that gives you 7.7% for a competitive DSCR loan. Now, DSCR loan interest rates are very volatile right now because that 5-year US Treasury has been climbing quite a bit over the last week and a half, although in the last 2 days it started to come back down a little bit by about 0.15%. So what's going on with DSCR loan interest rates is a very common question that you may be asking yourself. And really, it's just a lot of uncertainty. The economic data is encouraging that inflation is coming under control, but the Federal Reserve has essentially reset the market's expectation that interest rate cuts may not happen until later in this year. And so as a result, the market has repriced the expectation for where interest rates will be for the foreseeable future, and the term higher for longer remains. So how do you respond to that? We're advising our clients to consider a lower prepayment penalty. In fact, yesterday we announced low and no prepayment penalty options that we've added to our DSCR loan program. So we have a very cost-effective no prepayment penalty option. We have a 12-month prepayment penalty option, which is a 1% fee in year one, and then no fee after that. We have a 24-month prepayment penalty option now, which is a 2% fee in year one, a 1% fee in year two, and then no prepayment penalty after that, which gives you the ability to opportunistically refinance if and when rates do come down, hopefully over the next couple of years. Anything else to discuss? I would say we're seeing a lot of DSCR loan requests for purchases, and it's extremely important to understand that the property needs to be in rent-ready condition. If there's deferred maintenance, if the appraiser notes that the condition of the property has certain physical defects, for example, potential mold damage, potential infestation, potential roof leaks and water intrusion, or settlement issues like foundation issues, that could be a hindrance to being able to close a DSCR loan on a purchase. So a lot of people are having to negotiate with the seller to cure certain defects pre-close. Otherwise, it would make sense to purchase the property using a fix and flip loan, which is a short-term interest-only loan, conduct cost-effective renovations, and then refinance it into a DSCR loan with low or no seasoning. That means you can, as soon as the property is renovated, you can refinance it. It'll appraise for a higher value, and you'll be able to pull out up to 75% loan to value. So we're calling that program where you purchase it in a fix and flip loan and then you quickly refinance it into a DSCR loan, our new fix and rent program. So I recommend taking a look to see if that is a good option for you. It's a streamlined combination of fix and flip loan plus DSCR loan, and we're offering very significant discounts on our fees for the DSCR loan component, the refinance component. I would say just expect continued volatility. It's a challenging market to have a clear picture of where rates are going to be headed, and for that reason, focusing on lower prepayment penalties is our recommendation. But there are good deals that we're seeing out there, a lot of good off-market deals that you could find on our marketplace. So head on over to OfferMarket. Thank you so much for watching this video. Please leave any comments that you have in the comments section. We would love to be your DSCR lender. We'd love to help you grow your rental portfolio and share our insights with you. We look forward to connecting. Thanks so much.